Life insurance is the last thing a lot of people prioritize. It's the first thing your friends and family will ask. Do they have life insurance if someone passes on? So let's have that conversation while you're here. So for the last 2 weeks, I've spent a lot of time talking about mortgage protection. As a realtor myself, I want to encourage my audience, my community to be able to have the protection that they need for their family to be able to stay in the current home that you work so hard to buy built. So I've explained mortgage protection, and mortgage protection basically gives you an opportunity to cover your family for the term of the mortgage. So let's say if you have a 30-year mortgage, we can cover the full amount of your mortgage, or you can choose to cover a partial amount of the mortgage, depending on your budget. Or also we have a third option, which is critical period, which is basically you choose how much of coverage that you need and for how long to be able to give you the opportunity to your family to be able to make decisions on how best way to move forward after you're gone. Another option is we've talked about living benefits. So basically, some of the policies that you have as living benefits. So in case of any chronic illness, you still have the opportunity to get paid what you still here. So that is mortgage protection. And some of the conversations that have come up is, Sam, I already have term life insurance. Yes, mortgage protection is a form of term life, which basically in this position, we're targeting the term of the mortgage. But I ask you a question. How long have you had your term life? Have you had it for 10 years? And it's a 20 years, so you have 10 years left. How much time do you have on your mortgage? So that's a conversation to be had to make sure that you have the right policy to be able to protect your family as much as you want. So another conversation that I've arise is understanding what is term life insurance and what is whole life insurance. So let's start with term. Term is basically as it sounds, term. You're protected within the term of the insurance. So if it's at 10 years, 20 years, 30 years, you're protected within that term. Whole life is basically a lifelong policy. And here's the biggest difference. The difference is, yes, term life is affordable, whole life costs a little bit more. The main difference is you have to understand that the cost of insurance costs higher as you age. So the insurability factor comes in terms of whole life insurance. And another thing about all life insurance is it has what they call it cash value. So you have an opportunity to be able to grow your money through the compound interest factor. So I'm going to introduce whole life by introducing an IUL. An IUL is an index universal life insurance. And the main difference is it's an index account. So let's say for some of us who understand some of the accounts that we invest in, let's say a 401k. A 401k is basically invested in a variable account, which is basically in the stock market. An IUL